All right, I definitely didn't forget that we were doing RTH live stream today. But anyways, I see somebody requesting a spy chart. Let's talk about spy chart. Let's go here. Spy. So yesterday for spy, we drew up the resistance, which is obviously the same resistance on futures. Same chart, just a little tiny bit discrepancy. Under the weather? No, I'm not under the weather, but I recently had a very scary health issue that's it's kind of just stuck with me ever since. So I guess I'm totally fine and healthy, but it just kind of changed my voice. But yeah. So yesterday we drew up the resistance in SPY, which was 66755 ish and 66925 ish. And yeah, definitely the money voice for sure. It's that raspy old money voice that people have. But anyways, the zone of resistance was the exact same zone of resistance on futures that printed the minus 116-point move. And you can see that SPY is back in that zone and we're trying to print a daily higher low. We just look at futures, it's the same thing, right? Pretty much the same thing. But if you're on SPY, that's how the main resistance would look. And then a breakout of this resistance would lead to all-time high direct, most likely, right? All-time high most likely would be a direct move. Like what I mean by that is would probably break out and go to all-time high directly off of the breakout of this resistance. So on the daytime frame, this resistance was the best resistance on the chart, and yesterday we shorted it with futures. And anybody that wanted zero DTE, right, zero DTE puts, it made a lot of sense. After hours yesterday in the team meeting, I talked about how one of my mentors did zero DTE puts along with futures yesterday, and he got 15R in combination of those two instruments. He got 10R on the puts plus 1,000%, and he got about 6R on futures. So that's how you really take advantage of high conviction areas, right? Yesterday was an extremely high conviction area, and if you know if it doesn't work, then you're okay taking the stop loss here. But if you're a very elite trader, then you can load up and you can increase your position sizing. You don't have to bet your entire account, obviously, but you can load up at these resistances. And if you get a false breakout, trapped buyers situation, and we liquidate to the downside, yesterday we talked about zero DTE puts making more sense than zero DTE calls because sellers always take the elevator trip down the range. You're going to get a fantastic return as premiums are dry up here and they're getting juiced and juiced and juiced as we go lower into obvious support, right, to close your positions. Let's go back to the SPY chart. I talked about SPY from a bigger picture perspective, which is essentially the 1 week. The 1 week, the monthly, those are bigger picture perspectives, right? And with SPY, we primarily look at SPY as an investing instrument, right? We want to buy SPY shares as per usual. As anybody that wants to invest in the market, they want to buy SPY shares. So we drew up some bigger picture levels. Unfortunately, we did not get continuation of last Friday's breakdown. We couldn't even test the 1 week 20 EMA. So last week was just a flash crash, right? Literally a flash. It happens in one session and it doesn't continue. That showcases that the market was not volatile. It was definitely a random event purely based on, well, the president, right? And it is what it is. That's happened multiple times this year. The only difference, however, is that the last time this really happened, if we just quickly zoom out here, was in February. If I go to the daytime frame here, the last time this really happened was in February of 2025, right here, right? So the last time we had a flash crash, February 21st, and then we did get downside continuation on Monday. February 21st was a Friday. This is the last time that we got a similar situation to last Friday. But instead of a gap up and recovery, which is what bulls did this week, it was a continuation event, right? So if this were to happen on Monday, we had the levels drawn up on the SPY chart for us to be interested to start investing again and start loading up in shares again, right? So 624, 635, that area would have been nice to start buying. And then as we go lower, you go lower, go lower, you start to average down, right? Because you're a long-term investor. If I go back to the daytime frame, obviously last Friday's range is the most important range on the charts. on every single time frame, and you can see that we're likely to have an inside week within last Friday's range. Very likely, unless tomorrow or even today, unless tomorrow contests all-time high, which is definitely possible for sure. Buyers have been showcasing a little bit of strength, but the chart will remain neutral until this resistance pocket breaks out. As soon as this resistance pocket breaks out, yesterday's high, 670.23, then the chart will flip bullish, and then all-time high is next. All-time high must print a false breakout, or we're going to get new all-time high breakout expansion, which is the most bullish structures on the chart, right? Like last week. Last week was the most bullish structure on the chart until it eventually collapsed. So we will see. That is fine. Nutshell, once again, I'm going to be looking into 0DTEs a little bit more because it's definitely a viable strategy and it's 100% makes sense. But just remember what we talked about earlier. The first test of these structures and these levels always gives you the highest probability outcome. Always. And the more time you spend on the chart, the more you'll see that play out in front of your eyes. The first test of these levels is where we want to get in. The second test is tricky. The third test is tricky. Obviously, we can continue to print false breakdowns and false breakouts, but don't expect anything too crazy, like a minus 116 point move back to the downside, even though it is possible, right? So the next time that we have significant resistance like this, and who knows when the next time we're going to have significant resistance like this, I'll definitely be telling people that 0DTE puts make sense as well in alignment with futures, right? And the reason why this resistance at 6760 through 6772.50 was definitely an outlier is because if we go to the macro time frame, we haven't had resistance that strong, other than all-time high, obviously, in a very long time. I guess the last time we had it was right here on September 29th into October 1st. But even this resistance right here, if you guys just study classical technical analysis, this is an obvious, I believe it's inverted head and shoulders, right? So this resistance, though, is not the same as this resistance. This resistance obviously means more because of the contextual significance. This is the strongest resistance for a minus 3% flash crash. And then this is significant resistance for a controlled sell-off, only 2% to the downside. So still reading the narrative of the chart is extremely important. That's why yesterday I was telling people that this is a high conviction area. This is where we want to short. Okay, let's go ahead and take a shot. I even went outside of the SPY VIP yesterday, which is rare for me. And I called out that the trade plan is active. This area is a high conviction short. Regardless if it works out or not, this is where we want to take a trade today. This is the best trade for the day. Likely the best trade for the day. Other than that, I saw some of you guys take the false breakdown at 66.53 through 66.61 yesterday. And this is just a classic false breakdown of the 3:45 p.m. low that we talked about yesterday in the trade plan. Like so. But for me, I pretty much was done for the day before lunchtime. Because when I hit my first target, it's a set and forget trade. I don't tighten up my stop loss. But if I do extend the target, it's just set and forget, right? Either the target gets hit or it doesn't. All right, back to the chart right now. 67.41.50 through 67.47.25. This is a daily lower high that sellers are working on. And obviously this was significant resistance as well from last week, last Friday. Significant breakdown trigger from last Friday, making it significant resistance. The lower high makes sense here because if you're a seller, you probably don't want to see the prior day's high get tested. But either way, that would be a fantastic opportunity for us, just zone to zone risk management. And if you're a buyer today, you definitely want to sustain price action above this overnight shelf right here. This overnight shelf right here, evening shelf right here. It's a clean breakout from the overnight range, right? So holding above this structure can showcase strength and a lack of volatility, and then we can maybe contest the prior day's high like that. And then sellers break down here, then maybe we can get a setup Some of you guys that are interested at the 3:45 p.m. low, watch for the reaction in this zone and then play the false breakdown. And then if this zone breaks, if the 3:45 p.m. low breaks, we can liquidate into this zone, which is the high quality area of conviction, and we can look for the false breakdown of the prior day's low. Below the prior day's low, the market is likely heading down on some sort of news, just purely based on the range parameters for today, right? So we will see if that happens and if that's possible. If there's a Trump headline, I wrote in my notes that you don't have to trade a Trump headline, right? Don't have to. Don't have to look to buy the dip. You could be patient. Be patient, wait for price action to cool off, wait for the world to cool off, and wait for valid reasoning to look to buy the dip, right? And that's usually when the chart is showcasing extreme exhaustion and cool off for that beautiful short squeeze. In general, though, today's price action and today in general is going to be more tricky than Monday, Tuesday, and Wednesday, just in general. We will see if we get an inside day. Inside day means that price action closes within the prior day's range without contesting the prior day's high or low. That would create an inside day. And as we know, consolidation equals expansion, right? It's the most basic formula. It's like M equals, and what's the formula Albert Einstein said? I don't even know. I was very bad at math in school. But you guys know what I'm trying to say. If we do consolidate within a tight range, then we're expecting expansion whenever that range breaks out or breaks down. And inside days on the day time frame is the easiest representation of consolidation. Let's take a look at NQ on the 15-minute. So NQ actually did what we wanted to get today on ES. Let's just quickly draw a horizontal line here. There it is. So NQ ended up testing the prior day's high and it printed a false breakout to go to ES. ES did not. So NQ, that little bit of extra volatility that NQ has, sometimes you get some extra setups too, right? E equals MC squared. There it is. E equals MC squared. So for those of us that are trading NQ, that's something to always keep in the back of your mind, right? Volatility is slightly higher on NQ, so you can get some more setups versus ES, but I would say that it comes down to your personality too. Some people love the aggression on NQ. Some people thrive in that environment, and some people don't thrive in that environment. Some people thrive with the more methodical price action and a little bit more chill price action, which is what ES is, right? ES will have its moments of volatility, but in general, it's very routine, it's very structured, and we can pretty much rinse and repeat the same things every day. One thing that I will be watching right now is, not too good at drawing these lines, but you guys get the idea. If we do get another higher low, will we get another higher low at 67.1975 through 67.29? That is something I will be watching. Because if we do get another higher low in this zone, then price action is likely not going to be volatile today, and we probably won't get a long setup until volatility does increase, right? So I know a lot of traders that use trend lines, things like that. And one thing I will say is that any system that aligns with who's trapped and who's in control, so any system that has proper risk management and proper risk reward can be a successful system. You just have to find what resonates with you, and you have to take that system and refine it into a trading process. That's what I've done for the past 4 years, and everything has culminated into the Substack, right? So find something that resonates with you, whether it's the fibs. For me personally, I firmly believe that market structures are the king of the chart because it is the charts, right? You can't deny a prior day's high or a prior day's low. You can't deny these structures. They are literally the fundamentals that creates the chart. It's like the atoms in our body, just like price action creates the candlesticks, right? Other than that, though, I mean, you really cannot go wrong with understanding retracements. It's just very classic and basic percentages of the charts, especially with a high volume instrument like the S&P 500. Institutions love just classic and fixed percentages, right, of retracement. But anyways, make sure you guys are reading the Substack. I will quickly drag it over once again, and let's read the bull focus once again quickly here as buyers look fairly healthy. So we have to go into today's session with the understanding that the bias is neutral, but obviously the overnight session is fairly strong, right? So volatility is not active today. The market structures will dictate that. So for buyers today, their main task is to defend the stairs they've taken up into 67.60.75 through 67.72.50. Their structure will remain neutral because of these higher lows. Yesterday's low being the most important one. And a breakdown below will flip the intraday chart back bearish. Defending above 67.1975 through 67.2925 will showcase strength, and obviously defending / holding price at the gap fill 67.1525 can showcase a lack of market volatility. So let's write that with my raise here. The gap fill 67.1525. So we will be watching the gap fill as well. Gap fills are usually very important, especially with range trading parameters. If buyers want to attempt at breaking out yesterday's high in the macro resistance 67.60.75 through 67.72.50, then this zone must hold. Below we have 66.80 through 66.93, which can act as support for a potential daily higher low. But the best long setup today would be the false breakdown of yesterday's low 66.53.25 through 66.61.75. Likely we'll have to be patient here as volatility could be picking up. And then below yesterday's low, we'll be watching for liquidation into last Friday's low. Right? And then if we scroll down here in the trade plan, I have the most important zones of support and resistance drawn up in the trade plan section. Right? So Monday's low and then the September 26th low, which is just yesterday's low, 66.53 and 66.61. That's the most important support today from an intraday perspective. And then below that, we have 65.77 and 65.90, which is the next most significant intraday support structure. Resistance, we have 67.60.75 through 67.72.50. Remember, this is last Friday's core breakdown trigger, which will remain strong resistance in the previous day's high until proven otherwise. And then obviously we have all-time high likely to attract sellers on first test as well. And then obviously above all-time high is bullish time frame alignment, right? So that will remain very core structure always, right? All-time high will always be core structure. One thing I also did talk about in the notes is that volatility may be quieting down because the overnight range today is only about 40 points. The overnight range for the entire week so far has been large, very massive, but 40 points is just the classic maximum. So it does look like volatility is quieting down, and even the opening range for today is not that volatile. It's only about 20 points, but we'll see how the first hour range looks. As you guys know, the first hour range is the most important range for RTH. The first hour range is where all the big money is being fluctuated. And then after the first hour of the day, likely a lot of that money has already been traded. And as we head into lunchtime, price action can just chop it out until the afternoon where maybe that money can return, right? So yesterday is a good example. The first hour range was incredibly significant yesterday. When you set your key levels, such as previous day's high or low, are you using overnight low or regular trading hours low? So the regular trading hours daily highs and lows will always be extremely significant. So we have yesterday's high and yesterday's low, and then we have Tuesday's high, Tuesday's low is right here, Tuesday's high is right there. So RTH is usually the more significant range. Sometimes the overnight range will be significant as well. That's not saying that the overnight range doesn't have its merits, but RTH is usually the most significant range. But that's why I like to keep these old structures on the chart, right? Like the September 18th high, the September 26th overnight low. Because these structures, when you zoom out and connect the dots, they're the original levels that produced these overnight lows and highs, these RTH highs and lows throughout the week, right? So some structures matter more than others, right? Like yesterday's high probably matters more than Tuesday's high, even though Tuesday's high is significant structure just purely based on how price action is reacting to it when you connect the dots. So we go Tuesday's high, left to right, right? We have a breakout above Tuesday's high. You continue connecting the dots. We have a breakdown below Tuesday's high. Okay, now Tuesday's high printed a false breakout structure. Tuesday's high remained a resistance into the evening yesterday, and price action even sold off a tiny bit from that resistance. We tried to create another head and shoulders pattern, and then we broke out above Tuesday's high overnight today. So the overnight structure is important because if we get back below the overnight low, then we're back below Tuesday's high, and all of the structure is now flipping back a little bit more neutral, right? Because there is a slight edge to buyers right now as we are above the overnight lows, which was a breakout above, well, Tuesday's high, a recovery back above Tuesday's high, right? So that's how you understand the narrative of what's going on. But that narrative is primarily there for you and your psychology. Because if you can flow with price action like water in a river, you're probably going to have a very easy time at controlling your emotions. You're flowing with price action emotionlessly, right? Such that, though, you still want to take advantage of the highest probability trades and the best trade ideas purely from a risk management perspective, right? We want to fade the edges at the best support and resistance structures. So the prior day's high into this resistance structure up here is a better, more significant contextual structure than Tuesday's high. So that's where I want to take a setup, and I'm going to be patient for that setup because I know it's the best setup, right? Volatility is high, so we're getting these setups to play out, and we're getting multiple A plus setups sometimes, but volatility is obviously drying up a little bit right now. So that's why yesterday we got literally 2 A plus setups at the opposite ends of each significant structures, right? Lastly, you can use something called exhaustion to your advantage. We understand the range parameters, and we understand that price action is likely only going to produce a significant, really big move like last Friday if it has an excuse to do so. And the excuse last Friday was the presidential tweet. If we don't get something like that again today, then we can presume that selling is going to be exhausted into specific areas of support, and even buying could be exhausted into specific areas of resistance. That's what happened yesterday. Yesterday, buyers literally just got exhausted, even got exhausted over here for a quick sell-off. But buyers literally just got exhausted into this significant resistance. That gave me even more edge. That gave me even more edge and criteria to short this resistance. Would you still short yesterday's high, same short yesterday? Yes, it's the exact same setup, but I would prefer to see some sort of a Fibonacci trap. I would prefer to see a better false breakout. Yesterday was a high conviction area, so essentially what we did yesterday was just short the level, even though I waited a tiny bit to see the reaction. But yesterday was more of a valid predetermined short, and then today's more of a valid false breakout / Fibonacci trap short idea. But either way, it's strong resistance until proven otherwise, and even sellers are doing a pretty good job right now at holding the resistance below. We talked about in the bear focus today that bears holding this structure would be good for them, right, in order to backtest the supports below. So we'll see if we can get a false breakdown today, because you want price action to come to you, right? If you're longing the chart, the best longs you're going to get is because you longed red. The best shorts you're going to get is because you shorted green, right? So you want price action to come into you and do the opposite and fade the edge, right? That's the original principle of risk to reward that I learned when I first started trading, is that you want price to come to you. You want to buy red and you want to sell green. That's what Fibonacci did a good job of teaching me back in the day. And that's what Fibonacci will continue to do a good job of teaching people, is waiting for that pullback, waiting for that dip. Have the patience, have the maturity to wait for it too, because we don't want to gamble, right? Gambling is very immature in the stock market because the trading is fairly easy so long as we have the patience to execute the process and the edge, and the setups, right? Alrighty, folks, if you have any more questions, comments, concerns, you can let me know. It's been an absolutely phenomenal week. It's been probably the best week of the year, honestly, with yesterday's gap fill, or excuse me, with Tuesday's gap fill long and yesterday's macro resistance short. If you're swing trading the short, or if you're day trading the short at yesterday's high, it didn't matter because the swing trade ended up hitting targets. The target being, let me just get my chart back here. The target yesterday was 66.80, and we ended up hitting it for the swing trade. And then obviously yesterday we hit all our targets as well. Tuesday and Wednesday were great for this week for sure. Yes, very great. And the more you trade, the more you have conviction and the more you can flow with price action and you have a feel for price action. And what I mean by you have a feel for price action is you're not predicting price action, but you have a feel for the behavior of market participants, right? You have a feeling that there's probably a lot of people up here that have FOMO, and there's probably a lot of people up here that are buying into resistance. You can take advantage of that, and you want to do the opposites of that, right? Because you know that that's not a good area to long. 100%, it's not a good area to long. That's inarguable. Nobody should be longing resistance, macro resistance up here. This is not just resistance. This is the most significant resistance on the chart. We talked about that and we analyzed it thoroughly. So for me, yesterday, when I saw that price action was trending into it, and that's important to understand because as price action trends, there's not a lot of opportunity to get long here unless you did what we did on Tuesday, which is buy down here. Or if you bought at the close on Tuesday, which I guess makes sense as well. So if you didn't long here or you didn't long here, you have to be randomly longing overnight because overnight there's not another pullback. And then when RTH opens on Wednesday, you're like, well, this market is just going to continue trending. It's so bullish. But we've trended into the prior days, or should we trended into the most significant resistance. I love when price action goes in a single direction into these significant support and resistances because it creates a lot of emotion in market participants, a lot of fear and a lot of greed, right? That's going to be all for me today. The bot will remain active at the prior day's low, and the bot's going to remain active at the prior day's high. If you want to be a little aggressive today, the long at the 3:45 p.m. low using the 66.80 through 66.93 support structure makes sense for a daily higher low, but don't give up on the structure below if you're taking the long over here. Obviously, don't give up at the prior day's low if we do get this false breakdown to print out. If we get a surprise today and we don't get a range day, it's going to be something similar to last Friday. And what I mean by that is if you look at last Friday's candlesticks, they tell you everything that you need to know, right? This one candlestick is minus 55 points. The next candlestick is almost minus 100 points. And then the candlestick after that is minus 115 points. So the candlesticks will tell you the story. It will continue to tell you the narrative. Candlesticks are important to understanding price action, right? Because that's what price action is. Thank you guys so much for listening. We will be back tomorrow for the pre-market plus RTH live stream. I will not forget that we have RTH live stream tomorrow. Anyways, Rich will remind us if I do forget. And yeah, that's pretty much all for today. We made an absolute killing on Tuesday and Wednesday, so don't give back your gains, right? Now's not the time to overtrade and revenge trade. Don't give back your gains. There's nothing worse than making a killing and then giving it all back by the end of the week, right? Thank you guys so much for listening. Please read the Substack if you haven't already, and please drop me a like if you haven't already. It showcases to the website that we are doing a good job. Thank you guys so much for listening. I will see you later, and if the bot activates, the SPY VIPs will be alerted. Enjoy the rest of your day. Be back later for the after hours recap.